Hi, in the previous video, I have given some of the questions that you can attempt at home after you study the lesson accounting equation. And from this video, what I will be teaching is like I am showing you how you can record the transactions under the equation assets equal equity plus liability. And let's see how it goes, and if you have any questions or if you need any clarifications, so you can comment or you can drop me an email, so I will get back to you personally. Kids, let's take out the practical question which I have attached to the previous video, and we'll discuss one by one. Here 2013 transactions in someone's business are as follows. So if you can see the exercise which I have given you, so we'll start with the first one. In 3rd of April, investing rupees 200,000 in the business. Okay, so when a person, owner, investing capital to the business, what will happen in the business? So whenever he bringing cash 200,000, cash which is in the business is increasing. And also, since this is a capital, it is bringing by the owner, what is happening? The equity amount which is in the business is also getting increased. So now we know cash is a form of asset, and cash increases, equity increases, and how we can show it in the accounting equation assets equal equity plus liabilities. Like under assets we can write 200,000 within brackets cash. If we are doing one thing to one side of the equation, then we need to do the same thing for the other side. That means put equal mark. Under equity we need to show plus 200,000 and then capital. Okay, so we are done with the first one, and then we'll go to the second one. Purchase of stocks rupees 50,000. So that means we are purchasing stocks. When we purchase stocks by paying cash, what will happen? Money is getting reduced, money in the business getting reduced. And then when we purchase some goods, what will happen? We are getting stocks. Business is getting stocks, but money is getting reduced. So now we'll see how we can show this in the accounting equation. Assets equal equity plus liability. So now what will happen? Money is what? Cash is an asset. Then first we'll record what is getting increased. 50,000 is the stocks. We'll show it like this, plus 50,000 within brackets stocks. And then okay, so under assets first we are recording something which is getting increased, that means the stock in here, plus 50,000 within brackets stocks, and also cash is getting reduced. And then we will show now 50,000, we are writing the amount first and then within brackets cash. Okay, go to the other one. 6th of April, purchase stocks on credit. So here stocks on credit. So when we purchase by paying cash, what will happen? Our cash within the business will get decreased. But when we purchase something on credit basis, what will happen? Instead of reducing cash, we are getting a creditor to our business. That means we are liable to pay that person because we are buying that product on the basis of credit. That means we are agreeing to pay for them later. So when we purchase stocks on credit, what will happen? Business is getting a stock. Here the worth is 25,000. And also, since we are not paying cash, no change in cash. But instead we are getting a liability. That means our supplier will become our liability. We are getting a creditor simply. Okay, and then we'll see how we can show this in the accounting equation. When we purchase stocks on credit, what will happen? We are getting a stock worth rupees 25,000 within brackets stocks. And since we are purchasing on credit basis, what will happen? We are getting a creditor plus 25,000 within brackets we are writing creditor. Okay, clear. So now we will move to the other one, fourth transaction. That means 7th of April obtained a bank loan rupees 100,000. So when we obtain a bank loan means when we get bank loan, what will happen? We are getting cash from the bank. And also what will happen? When we are taking a bank loan, that means we need to pay them later. That means we are incurring a liability as well. When we come home from bank, we are bringing cash to the business. And also our liability is getting increased because now we are obtaining a new bank loan. So both of them are increasing, cash and liability. So now we'll see how we can show it in the accounting equation. Assets, we are increasing cash plus write the amount 100,000 within brackets cash equal. If we are doing one thing to the other side, as I explained earlier also, we need to do the same to the other side of the equation. Here we are increasing the amount of liabilities by 100,000 within brackets bank loan. That is our liability. Okay. Now let's see fifth transaction. That means 9th of April sales rupees 75,000. When a business sells something, what will happen? If we sell on cash basis, we are getting cash from the customers. If we sell on credit basis, what will happen? We are incurring a debtor, but we are selling our goods. So here we are doing sales on cash basis. Because why we take cash basis? Because they have not mentioned anything regarding credit terms. If they have mentioned a name, that means it is on credit basis. Okay, for an example, if it shows selling goods to Abans worth of rupees 25,000. So in that case, what will happen? We have sold goods on credit terms. So now here they are providing only sales rupees 25,000. So we are taking it as cash basis sales. Now what will happen? When we sell something, we are getting cash to the business. Cash 25,000. And then sales, we are getting a income of 25,000. So how we can record this in the equation? Assets, cash is a form of asset, plus 25,000 cash, and another one is increasing, equity or from liability. What is that? From equity. Why? We are getting an income 25,000. So when we are getting an income, we need to add it to the equity. When we are paying some amount, for an example, drawings, electricity payments, telephone bills, so likewise now we need to deduct it from the equity. And if there is any profit, net profit, so we need to add it to equity. If there is any loss, we need to deduct it from here. Okay, so put plus 25,000 income. So that is our income here. This is a basic transaction of income. Okay. Look at the sixth transaction. That means 15th April, advertisement rupees 2000. This is a payment. So now what will happen when we pay for advertisements? Cash in the business getting reduced, and also expense. We are incurring a expense. That is the two effects that will happen to the business. So now let's see how we can record this into the assets equal equity plus liability equation. So cash is a form of asset. We are reducing cash amount here, that is 2000 within brackets cash. Since we are incurring an expense, from where we need to deduct it? We need to deduct it from equity. 2000 advertisement. Okay, so now let's move to the other one. 7th. All these are payments. Power rupees 1000, wages rupees 5000. Same thing. Let's see how we can record it. Assets equal equity plus liability. So since all of these are payments, we need to reduce cash amount. So we'll record power first. 1000 within brackets power. Power means this is the payment which made for electricity bill, and also reducing this. Here write cash, here power.